In this in-depth analysis of the technology industry for Q3 2025, we break down the key trends shaping investments, workforce, infrastructure, and global market dynamics, offering crucial context for professionals, investors, leaders, and MBA and Master's applicants. We observed 5 trends. Number 1, strategic concentration of AI investments in infrastructure. AI remains the top priority for VC investors, with companies developing foundational models and infrastructure layers attracting the largest funding rounds, including blockbuster races by companies like Anthropic, xAI, and Reflection AI. Nearly 80% of all Q3 venture funding flowed into artificial intelligence. This includes massive financing such as the $10 billion raised by xAI, which is split between equity and debt, reflecting the market's conviction in AI as a strategic critical infrastructure layer, not merely as a category of tools. This private market activity mirrors the intense capex commitments of big technology companies. A prime example is Amazon's $38 billion 7-year deal with OpenAI to provide extensive access to NVIDIA's GPUs through AWS, a move that helped Amazon position and accelerate AWS growth to 20% in Q3 of 2025. This dynamic validates a continued focus on data centers, next-generation chips, and energy assets as key drivers of deal flow. The second trend is workforce contraction and the great skill pivot. The global tech industry continued its strategic workforce contraction in Q3, shifting resource allocation away from generalist and mid-level roles towards specialized AI talent. The wave of layoffs, now reaching 112,000 tech employees worldwide in 2025, is not just a reaction to macroeconomic slowdowns, but a strategic pivot to AI and efficiency. Major cuts were seen across the board, with Intel executing a significant restructuring to regain footing against rivals in the semiconductor industry. This structural change was profoundly visible in India's IT sector, where Tata Consulting Services, or TCS, reported its steepest ever quarterly decline in headcount, eliminating around 20,000 roles during the July to September 2025 quarter. This contraction is directly attributed to AI-led restructuring and an evolving skills mismatch as automation diminishes the demand for conventional technical positions. While headcount shrinks, the demand for high-value skills is skyrocketing. The tech workforce will grow at twice the rate of the overall US workforce in the next decade. The immediate need is for business application power users and power developers who can integrate platforms like Microsoft Copilot and Google Duet AI into enterprise workflows. But a lack of critical technical skills, particularly in AI, machine learning, and cloud computing, is causing 48% of IT professionals to abandon projects. If you need more in-depth analysis and advice, including salary trends, industry trends, curricular analysis, and exclusive admissions advice about MBA and Master's application, subscribe to F1GMAT Premium at premium.f1gmat.com/subscribe. The third trend is emergence of agentic AI and governance platforms. Generative AI, or Gen AI systems, matured in Q3 from being mere content generation tools to becoming agentic AI, autonomous systems capable of complex multi-step actions without constant human input. McKinsey Global Institute identified agentic AI as among the fastest growing trends of 2025, noting that these systems are moving from pilot projects to practical applications as virtual co-workers. Early adopters are seeing 20 to 30% faster workflow cycles in tasks like ERP or CRM orchestration, and up to 40% faster claim handling in customer service. The The rise of autonomous action introduced unprecedented governance and compliance risks. Regulators and boards are now demanding embedded compliance, which involves building regulatory requirements directly into an AI system's design and operation. This focus on governance is driving a new category of tools. Platforms are evolving from simple automation tools into AI systems that autonomously generate, maintain, and execute tests. This new wave of tools is critical for ensuring the trustworthiness, safety, and compliance of the AI systems themselves, moving testing beyond functional validation to comprehensive AI system assurance. If you need more in-depth analysis and advice, including salary trends, industry trends, curricular analysis, and exclusive admissions advice about MBA and Master's application, subscribe to F1GMAT Premium at premium.f1gmat.com/subscribe. The fourth trend is targeted mergers and acquisition. The second major theme of quarter three was the enterprise's focus on operational resilience and ruthlessly cutting cost overheads by optimizing existing digital infrastructure. Mergers and acquisition activity in the technology space remain highly selective, prioritizing deals that immediately deliver operational efficiency, proprietary data access, or AI capabilities. M&A activity was concentrated in application software and IT services. Unlike previous speculative booms, this wave focused on embedding AI and strengthening core product ecosystems, reflecting a buy versus build approach for critical digital capabilities that support the AI transition. A Deloitte survey revealed that enterprise resource planning, or ERP, was the only traditional tech investment that bucked the consolidation trend, climbing in popularity in 2025. This is because ERP investments are seen as the foundational backbone for integrating AI into operations, demonstrating that companies are strengthening core systems to support new AI layers. Nearly half of AI investors also invested in ERP, underscoring its role in ensuring scalable AI deployment. The fifth trend is the rise of industry cloud platforms. The cloud market is moving past generic utility to specialized platform creation, with major growth in solutions tailored to specific vertical industries. The industry is witnessing increasing demand for cloud solutions tailored to specific sectors such as healthcare, finance, and manufacturing. These industry cloud platforms offer pre-built industry-specific workflows, compliance checks, and data models. This specialization ties into a broader enterprise trend towards operational efficiency. Companies are increasingly pushing toward managed services and engineering as a service (EaaS) to streamline operations and ensure their cloud spending is optimized for productivity. If you need more in-depth analysis and advice, including salary trends, industry trends, curricular analysis, and exclusive admissions advice about MBA and Master's application, subscribe to F1GMAT Premium at premium.f1gmat.com/subscribe. The sixth trend is geopolitical pressure and supply chain de-risking. Geopolitical competition, particularly between the US and China, continue to drive scrutiny on big tech and force companies to double down on supply chain security and regional diversification. As PwC noted, increased regulatory and geopolitical pressure impacted supply chain security, particularly in semiconductors, forcing firms to navigate evolving global trade policies. This led to a continued push for regionalization of manufacturing and sourcing, prioritizing resilience over pure cost efficiency. In between all these developments in AI, defense tech remained a priority for VC investors in quarter three, attracting capital for dual-use technologies, that is, solutions with both commercial and military applications. This reflects a sustained long-term focus by governments and capital on modernizing defense infrastructure and strengthening domestic technological capabilities. The seventh trend is the Asia Pacific boom in capital markets. While major economies showed a mixed recovery, the Asia Pacific region, led by key emerging markets, proved to be a critical pocket of growth. Despite a global slowdown, key emerging markets stood out. WPP's Q3 earnings showed a global slowdown, but India stands out with strong growth. Also, Apple achieved its highest value growth during Q3 of 2025 in India, underscoring strong consumer and enterprise demand in the market. While global IPO proceeds surged, the market was highly selective. Crucially, the US led the world in capital raised, but India posted a standout performance in terms of deal volume and domestic market strength, further highlighting the Asia Pacific outperformance in capital markets. So, our final take is that the technology industry is undergoing an AI driven restructuring. The capital cycle is no longer about maximizing growth at all costs. It's about optimizing the technological architecture to maximize efficiency, scale AI, and manage growing geopolitical risk. This has created a bifurcated market, one where AI infrastructure builders are rewarded with immense capital, and another where the rest of the ecosystem must pivot their talent and operations to survive the efficiency mandate. If you need more in depth analysis and advice, including salary trends, industry trends, curricular analysis, and exclusive admissions advice about MBA and Master's application, subscribe to F1GMAT Premium at premium.f1gmat.com/subscribe.